Yeah, greetings everyone. Greetings everyone. This is Obi-Wan, your finance coach, OMC Finance Academy. Okay, so today, a major event happened yesterday in the US. That means that the Federal Reserve, Jerome Powell, okay, had to cut the Fed rate, that's the interest rate, by 25 basis points. So it's reduced from 4.5% to 4.25%. So they cut by 25 basis points. So that means that the Federal Reserve in the US are shifting their monetary policy stance. Before now, they were hawkish in terms of because inflation was high, they were very hawkish. But now, according to Powell, they are going neutral now. Probably they might be dovish. Okay, so in this video, you know, I will look at US economy, I will look at Nigerian economy. The question I'm asking is should Nigeria also start cutting interest rates in the next monetary policy meeting? Should we follow the US approach? Okay, my own answer is no. For me, I will want the central bank monetary policy committee, the monetary policy committee in Nigeria, probably to commence cutting first quarter 2026, in my own opinion. And I'll give you my reasons why I'm saying that because it's real, from what I'm seeing, benefits the masses eventually. Okay, so I want to compare this to economy and I'll tell you why I feel we should start cutting from next year and not possibly this year. Okay, I'll tell you my reason for that. Okay, however, manufacturer could say that the interest rate was high is high, but if you look at my analysis, you notice that okay. The summary of my analysis is that I expect, capital flights from the US to emerging markets, you know, probably yeah, emerging market and developing economy. I expect that because the interest rate is still high, there'll be capital inflow into the economy, and the exchange rate our exchange rate will be stronger. So when our exchange rate is stronger, that means that we are an imported economy. Price of inflation will come down. Inflation rates will reduce the more. Then manufacturers will also enjoy. The industrial sector will enjoy because they import most of their raw material. They will import it at a good exchange rate. So that is my own opinion as regards that. So let's enjoy the benefits of the US that have started cutting now. If we start cutting now, it therefore means that if we start cutting immediately now, that means that we may not benefit from the capital transfer from developed economy to developing or emerging economy. We might not really benefit from that transfer. So now let me just give you one or two data as regards why I took this position. Okay, so just explaining from the major event that happened yesterday, the 17th. I'm making this video on the 18th of September. Just yesterday, 17th of September, this happened. The Federal Reserve in the US started, cutting the interest rate. Okay, so I'll give you one or two data. Yeah. Okay. So, as I said, I'll give you one or two data to buttress my position, my opinion as regards what's happening in the US and what's happening in Nigeria. So you could see our board. You could see my board as regards the US. Yeah, I have the US inflation figure. I have the inflation figure and the inflation rate in the US. I also have the interest rates in the US. Okay. Now, what you will notice is, I just look at some key years in the inflation. This inflation rate we are seeing here, this inflation rate is year on year inflation rate. Okay. And in the US, they have a target. They want to achieve 2% inflation rate. You can see why I wrote it here, 2% inflation rate. That's their target. But in June 2022, in the US, you will notice that the inflation rate was very high, 9.1%. It was very, very high at 9.1%. Okay. Now, at that June, the interest rate was 1.75%. Okay. So that means that there's a kind of imbalance in the economy, because usually in a reasonable economy, the interest rate should be more than the inflation rate, so that anytime you're investing in that economy, there should be real gain. This interest rate is the rate at which, let's say, you invest in treasury bills, in government treasury bill, you know, this is the rate at which what you earn. You earn 1.7%, averagely from the government in 2022. But the inflation rate is 9.1%. So that means that inflation is more than your money does not have value as at June 2022, because the inflation is the rate at which prices of goods are going up is far more than the money you are making. So ideally, these interest rates, the money you are making, if you invest with government treasury bills or government bonds or any fixed instrument, should be more. This rate should be more than this. Okay, so you could see that there was an imbalance in June 2022. So the reasonable thing for the central bank to do is to increase the interest rate, to increase this interest rate. That's the reasonable thing they will do, to increase the interest rate. Okay, and so that eventually this will fall. So their aim is to either reduce the inflation rate or increase the interest rate. Okay, so what they did in those period was to increase the interest rate significantly. So you could see by June 2023, what they achieved is that June 2023, you notice that the inflation rate has dropped from 9.1% to 3%. Why? Why? Because they increased their interest rate from 1.75 to 5.25. You could see they increased it. So inflation dropped. So they were kind of okay, that's good, we are happy. Okay, so that means that there was free money in the US. If a fixed income trader, and you put your money in US Treasury bills, in US fixed income security, you are going to make money. You don't need to do any analysis. You'll be making 5.25% annually in dollars, and this is significant because it's a big market. People have money in the US. So at this rate, this is what we call monetary policy tightening. They were tightening the economy. They don't want people to hold money, rather they want them to put it in government security. So they increase the interest rate. Okay. So don't forget that as you're making money from the government is spending more. This is borrowing costs from the government. They will pay you 5.2%. Why you, the citizen, will make money at this rate? So people are investing in the US. So dollar was getting stronger at this point because it's 5.25. You could say inflation is coming down. So now this is where the problem started in the US. When the inflation got to 3.0, their target, look at their target, they want it to come down to 2.0 before they start being dovish. At this point, they are hawkish. They are hawkish. They are increasing their interest rate. They are hawkish. 1.75 to 5.25. Anytime they are increasing interest rate, they are hawkish. So now you could say that you will now notice that at this point, June, the interest inflation rate is 3.0%, but they want to achieve 2%. Okay, so they maintain these interest rates. In fact, at a point they reduced the interest rates, by 25 basis points, to 5.0%. They reduce it from 5.25 to 5.0%. Now when you look at that, when you look at that, you notice that the inflation rate still maintain 3.0%. Okay, so in June 2025, the inflation rate fell marginally. You know, it fell marginally from 3.0% to 2.7%. That's in June 2025. Now, at this point, they are still hawkish. At this point, they are still hawkish because at this rate, these are high rates. they are still hawkish at this point. So you could see that the uh, inflation rate also came down to 2.7 as at June. Now, at this point, people are expecting that you are close to your target of 2%. Inflation rate is 2.7%. You should start cutting rates. They should start cutting. They've started cutting, but the cut is not significant. They cut by 50 basis points. Yeah, by 50 basis from 5.0% to 4.5. This is 50 basis point. Okay. Since June 2020, they cut that was in 2024. Since then, they've not cut. They've not cut since then. So now in June 2025, they've achieved 2.7 percent inflation rate, 2.7% inflation rate. So we are not expecting in July, August, that they will cut. They did not cut all this why, and the reason why they did not cut is that they want to achieve their 2% target, and they're also looking at their second mandate, which is unemployment. I don't want to go into the unemployment figure and the tariff issues because this video will be very, very long, and the immigration issues. Let me just keep it a bit simple. So eventually, they stagnated. Inflation rate increased from 2.7 to the last figure that they released in September was 2.9. It increased back, approaching 3.0. So they were confused because if they start cutting, it's possible that inflation will increase again. But from pressure, they've been pressurized to start cutting. They just find one reason like that and say, okay, due to unemployment that is not too good, let's cut. So yesterday they cut from 4.5% to 4.25%. They cut, despite the fact that inflation increased, they still cut. So a lot of criticism, a lot of comments, uncertainty in the US economy. It's a big economy, but they are experiencing a lot of uncertainty. So one should be careful operating in this market because inflation could increase at any time. But if you're an investor or you're a trader, you need to listen to, some of my analysis, listen to Bloomberg, Yahoo Finance, a lot of CNBC, a lot of international news, so that you will understand better. Just be watchful so you won't make bad investment decisions. But good opportunities are still in the US. A lot of people have made money from what I've explained now, from this cut that happened yesterday. A lot of people made money because gold, US tech, US 500, US 30, everything went up. My source is investing.com. Investing.com, that's the analytical tool I use for my analysis. Now, let's compare it to Nigeria. What's happening in Nigeria now? You could see in Nigeria, you will see that you will see the inflation rates in Nigeria. The inflation rate is also, you will see that inflation rates as at June 2022 was 18.6%. As at June 2022, June 2023, it increased to 22.79%. Now, due to one or two events, due to the subsidy removal and the floating of the exchange rate, inflation in June 24 was around 34.19%. Okay. Now, we did what we call rebasing of the GDP, and just rebasing, we achieved a fall in inflation rate from, at June 2025, it was 22.2%. You can see now. So now is after this rebasing that me I'm watching what's happening. After this rebasing, inflation is still reducing in Nigeria from 22.2% to 2%. As of September, it was 20.12%. 20, these are those CPI figure, not the core inflation figure. It's 20.12%. You can see that it's very reasonable. It's reducing from 22.22% to 20.12%. It fell. Look at in the US again. From 2.9%, it increased to 2.9. From 2.7%, it increased to 2.9%. You can see it fell here, it increased here. It fell from 3.0% to 2.7. From 2.7, it increased to 2.9. You can see there's kind of uncertainty. This is due to tariff, tariff mainly due to tariff from what we can see. But yeah, our trajectory in Nigeria is kind of very reasonable and stable. And there's more certainty at the macroeconomic space in Nigeria. You could see it fell, based on this figure. Some people will say these figures are political figure, but that's the figure we have. So we analysts we use the figure that we have, and sometimes we gouge it with what is happening outside. So as in the open market, so gouge this inflation figure. But of course, there's politics everywhere in the US, in the UK, in Nigeria. There are politics, but these are the figures that were issued by the authorities, and that's what we can use for our analysis. Okay, so but these figures in Nigeria are very reasonable. So we've been maintaining our, you could see that you will notice something that now look at the interest rate. The interest rate was jacked up from 13%. It increased to 18.7% because the central bank was fighting the central bank was fighting inflation using interest rate. That is not the only way to fight inflation. The other way is there's what they call supply management. This is demand management. In the supply side, in terms of the security, the infrastructure, that's another story entirely. But I'm looking at it from the money from demand side, from the monetary side. So 13%, they increased the interest rate to 18.75%. They also increased it to 26.75%. You see? Now, this is a big increment because inflation keep going up. So they increased it to 26.75%. They also increased it to 27.5%. So it has been on the increase. That means that anytime interest rates by central bank is increasing like this, it's increasing like this. You can see Nigeria is increasing. They are hawkish. They are hawkish. So me, I'm saying that some people are now, some analysts are saying that the central bank has been hawkish enough. Let them start being dovish, start cutting. But for me, that's why I said that let's still benefit from reduction in interest rate. Their target mainly from literatures is to achieve, a single digit inflation. That's in Nigeria, like 9%, 8%, anything single digit. But we are still at double digits. So I will expect them to be hawkish for some time, so that this inflation rate should go down the more, so close to single digits. Maybe when it get to 12%, 11%, then they can become dovish. They can move to neutral, then from neutral to being dovish. Okay, so that's why I'm saying that they should not be in a hurry to cut. They should not be carried away that inflation is coming down. If you're going to start cutting now, inflation will go up again. Okay, so that's why I feel let them calm down. Now that the US have started cutting, from 5 to 4.5, from 4.5 to 4.25. In the next meeting, they forecast they will cut the more. They might cut, this rate might reduce to, let's say, 3.5 before the end of the year, or 3.75. From the way I'm saying it, they want to start, they will continue cutting in the US. So let us calm down in Nigeria. Let's calm down. At least, if we calm down for the end of the year, then from the first quarter of 2026, we might now start thinking of, okay, let's cut so that, because now we will benefit our exchange rate to be stronger. The people will say, oh, the interest rate is coming down in the US. Let me sell my securities and invest in Nigeria, or invest Nigeria and South Africa. We are the biggest markets in Africa. Invest in South Africa, invest in Nigeria. So they'll bring the capital here. When they bring the capital here, they'll be looking for naira. Then naira will be stronger. When naira is stronger, anything we are doing, it will be cheaper. We'll have more bargaining power. For now, let's enjoy it while it lasts. Maybe as we enjoy it, let's start working on our fiscal space, our budgeting, so that we can consolidate the gains, in the long run. So that's why I feel that my position is that let's calm down from now to the first quarter of 2026 before we can start thinking of a cut. But if they decide to cut in their next meeting, well, that's fine. We'll still make profit from there in the financial markets. But it be that is me as an investor, as a trader, I also encourage you guys to try and Just try and always keep your eyes on the news, know what's happening, so that you can benefit from what's happening in the financial market. There's a lot happening there. I can make good income from the financial market globally. Thank you for listening. Your success is my concern. Bye for now. Yeah, I hope you enjoyed our video as regards analysis of inflation rate and interest rates, comparing the Nigerian economy with the US economy. So we do this analysis comparing different economy, the UK economy, the France economy, the German economy, looking for opportunities from the macro level. Okay, so you could also learn these are ways of investing using some fundamentals. You can join us at OMC Finance Academy, OMC Finance Academy, where you learn how to do this analysis yourself, and you'll be mentored on how to do them so that you can spot opportunities on your own and tap into them and make passive income. Okay, you can call us on 080 or 070 Thank you for listening. Enjoy the rest of your day. Enjoy the rest of your week. Bye.